Good morning, friends and fellow traders. I hope everyone had a fantastic weekend. You're ready to get back to work. This is Doug Campbell with Right Way Options, coming to you with a morning market preparation video for July 23rd, 2018. So last week we had this wonderful hold of support. Buyers of those bulls continued to fight to hold on to that support. So you can see we held on to this 250 level, or 25,000 in the Dow, by just a tiny few points, just barely hanging on there. The market, I think, overall has large or high expectations for earnings this quarter, and is trying very hard to put on a brave face and stay positive here. That's a good thing for us as long as those earnings do continue to come in and showing good results. This week is a huge week, and we could expect some really wild and woolly price action here this week because we have over 800 companies reporting earnings. Almost a full third of the S&P 500 will report this week, which means there's going to be an awful lot of data flying around, an awful lot of emotion being released onto the market all at once. So be very focused on price action. Be a little bit careful here this week. But looking at these indexes, you can see we held above this support just barely. That's a good thing. Remember, we have resistance above, and there is another layer of support underneath here if we happen to slip lower based on some of the numbers and things as they start coming out. Also, let's take a look at the SPY. SPY held up really well on Friday, holding above this key support level, just kind of hanging in there, not really doing a whole lot, but just hanging in there. And I suspect maybe what we could be doing is just giving a little bit of time, a little breather for some of these moving averages possibly to catch up. Remember, we moved a long ways really, really fast, and it wouldn't, if with anticipation being so high on these earnings, if even a really good earnings report could disappoint the market. So we'll want to stay kind of focused on price action. It seems like they're pricing everything for some perfection. So be careful, particularly if you're speculating around earnings. And that's just something I really don't do. I don't gamble around earnings much at all. I usually wait for the reaction to occur. I wait for price action to stabilize, and then I trade. Jumping in and gambling on an unknown event isn't how I like to trade. But if that is your method of trading, just be really, really focused to that price action and try to stay unbiased. Let's take a look at the Qs. This is where my biggest concern lies, and not that it's a major concern, just a little bit of apprehension, I guess. The Qs are priced really for perfection here. We're up here at all-time record highs as we head into earnings, and there's quite a few companies out there that are at or near all-time highs as we go into that earnings report. So folks are expecting some pretty good results. Let's hope that they can perform, because if they don't, we could see just some trouble as if the market is disappointed and stocks start to fail in it. So I'm pulling for some good results. I want to see good results. I want the market to go up. So let's hope that that's what we see. Just be really careful about gambling ahead of that. Right now, we're doing really well here in the Qs. On Friday, we held on to this price support. Remember, we had this really nice big bullish engulfing candle. So this little pullback right here to test support, not out of the ordinary. What we need to see is those bulls stepping in here to really start pushing that higher. IWM pushed up nicely here toward the all-time high resistance, and we're holding below it, but we're also holding above support, so we're in good shape here on IWM as well. And with the trade issues out there circulating, IWM has very little worry on those. Just simply because most of these companies are domestic, they don't have a lot of trade war worries. So that's helping this index hold up pretty strongly. Let's take a look at the VIX. VIX kind of held in there pretty flat on Friday. Really didn't do a whole lot. We started to rise up a little bit, but came right back down. Pretty much just hanging in there in this new range of support for the VIX. And so far, no major fear creeping into the market. T2122, that 4-week new high, new low ratio. As you can see, on Friday, we moved back down toward this center range. So being down here toward the middle gives us plenty of opportunity to move up or move down. Either any of that is possible. We can even move sideways, obviously. And there's no indication here in T2122 that we're anywhere close to being, in a bearish or bullish zone. So anything is possible around these earnings. We'll have to stay really focused on price action. Let's take a quick look. We have on the economic calendar today, we have existing home sales at 10 a.m. That's really the only market moving event today. They're expecting that to just tick up slightly. Those existing home sales have been just a little bit soft this year, but tick up slightly today, so maybe that will give the market just a slight boost. You obviously never know what's going to happen, how the market will react to those, but if we get a little bit better than expected in that number, we might see a little improvement over current futures, which right now futures are just basically flat. We've been mostly lower this morning, but we have bounced into the bullish zone. And so we've been just kind of ranging around a flat open this morning as we wait for the kickoff for all of these earnings. So keep in mind, we also have some bond events here today as well. If we take a look at the earnings reports, we've got about 80 companies reporting earnings today, and they're going to be coming in fast and furious. Too many to really report on here this morning, but also keep in mind after the market, we have a couple of big ones like Google and Google L reporting earnings. So they are definitely market movers and one that you want to pay attention to after the market close. We're also going to have reports from like Amazon and Facebook this week. So lots of tech, big tech earnings that maybe could set a direction for our market. We'll have to just simply stay focused on what's going on with these charts and see how the market responds to their earnings reports. With that, everyone, let's take a run back here just real quickly. Keep in mind that even though we are looking really, really good here, holding on Friday, that there are still some issues that we have to address. We obviously are below resistance levels here in the diamonds and the SPY. That doesn't mean that we are anywhere close to falling. I'm not trying to suggest a direction here, just kind of keeping an eye on where we are overall in the market and that we watch it closely. When it comes to these earnings reports, and there's going to be a bunch of them coming out, be real careful not to gamble. It's so easy to gamble around earnings. We get caught up in the drama of these earnings. Folks watch the financial news shows and they play all that dramatic bumper music and there's all this anticipation that's built up. Be real careful to try and avoid that. Stay focused to your price action. Remember, earnings are also a really kind of the perfect place, breeding ground for what we call a whipsaw, and that is we can get a reactionary move, maybe up, after an earnings report. And just shortly after that, we get that reactionary move back down, whipping back down. They call it a whipsaw. And then we can even whip back up, or we could follow through to the downside or follow through to the upside, however that plays out. So be real watchful of those whipsaws, and be watchful of big gap mornings. We can have a big gap up tomorrow morning, and the next morning a big gap down, and there's no way to predict those. There's no way to know what that's going to be. So plan your risk carefully around big earnings weeks like this. Now, there's going to be opportunities to trade, without a doubt. There's going to be good opportunities to trade, but plan that risk carefully and make sure you're entering those trades correctly. Remember the rule that I trade under. I want to see prices. I want to see stocks that are trending, and I want to see in that trend stock prices pulling back to test support area, and I want to be a buyer at or near price support areas. The reason that is my stop loss is close. I have very little risk in the trade, and if I do get stopped out, it's not a big deal. But if I am correct, then there's lots of potential upside. One of the mistakes that seems to be happening a lot as I coach folks is we've been taught so many times to buy the breakout. And as soon as that stock breaks out, what we're seeing a lot of here recently, stock breaks out, it immediately pulls back. Not all the way back, but we're getting a lot of those little pullbacks getting stopped out before the stock continues higher. So be careful. We want to be buying at or near price support levels if you're looking long. With that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons. And please always feel free to share this video and leave a comment for me. I do appreciate those. Everyone, take care. Have an awesome, awesome day. I wish you great success. We'll talk to you all bright and early Tuesday morning. Take care, everyone.